Financial analysts have been keeping an eye on bonds. Bonds have been expanding further and further despite giving a worse incentive to do so. Even the most risky areas of the world have been showing very little potential profit on bonds. That's not normal, and you know this is all caused by central bank intervention. So let's take a look. You came here for the truth, so let me unveil that for you. Look at this chart. You are seeing the S&P 500 versus essentially high-yield bonds. These high-yield bonds are supposed to give you high yields, but that's not the case anymore. We are seeing a complete stagnation in this way. This has been going on essentially since the end of 2016, and all the while the S&P 500 has come up. There is a chasm that is formed in between these two, and this is unfortunately showing the shakiness, showing the risk that is developing in the bond market globally. When you look around the world, you see a very big issue with bonds. One that I continuously point out, I just did a video about it recently, where $10 trillion worth of bonds are selling at a negative yield. That means if everything goes well, you get less money back than you put in. That's not a good sign. Despite what the market tells you, that, okay, well, it means that these are great assets. That's basically what happens. As long as they're willing to sell them, people are buying them, whether it's central banks or whether it's investment companies. As long as somebody's buying them, it's a good investment. That's when you know this is all a fraud. Now, I'll just quickly go over these here. You're looking at the 30-year, going back to when Draghi made some comments. This has been coming downward. The yield curve is basically falling off, and you'll see that here in this case, just over the past week or two, looking at this here, going back to the same levels experienced in the mid-2000s. That's not a good sign. You are witnessing a potential correction in the bond market. All the money seems to be flowing into equities. Could this be the end for the bull in bonds? We'll have to judge it as time goes on. It's not looking good right now. Now, what they are highlighting here in this chart is, as I mentioned earlier, you're seeing how they were well connected together up until this moment, the end of 2016, and then they decide to split apart. And there's a lot of reasons for this. The question is, where do we go from here? What happens? Is there the potential of both falling down? I don't know. I don't know what's going to happen. I think the S&P 500 will continue to see money going into it simply because central banks print it up for free. They have nowhere else to put it. They need to put it somewhere that they believe is safe. They need to get yield on it, and they're not going to get that in bonds. I mean, they're looking at negative yields in the bond market. So it's better to let the ECB print up money. They can buy up all the garbage. All the while, you have the central banks just pumping their money into US stocks. That's what I think will happen for the foreseeable future until things change. I don't know at what point they're deciding to pull back on the liquidity. They've promised $1 trillion worth to be pulled back in 2018. I don't know. I don't know if they're going to get to that point. And then here, you can see this here. Seems to be a dollar shortage that's going on right now. This is actually worse than back when the EU had this whole sovereign debt crisis, everything that was happening there. I'm going to keep my eyes peeled on this. I hope you do the same. I don't want to get into too many details right now because it's happened so quickly, so short term, and this does occur. Things happen, they snap down, they snap back. I just wanted to mention it. Keep your eyes on it. Let's focus on the dollar. We're seeing the dollar itself, it had really strengthened over the years, but in more recent weeks, definitely in months, we've definitely seen that changing. Now what's happening with the dollar shortage, I don't know. Just wanted to mention it. Thought it would be important. That's all for this video. If you found it informative, please give me a thumbs up. Last but not least, if you found the video informative, I know you'll find my books, The Money GPS, and my new release, Global Economic Collapse, even more informative. There's tons of charts and just history, foundation. That's in the first book. The second book, I get into familiar topics, but I actually talk about earning income. I get into becoming self-sufficient and so much more. So links are in the description below. Take care.